Hey everybody, and good evening. This is a special video on the RockBot script. I had a request today from a new subscriber, and I promised I would make a video here describing some of the things that they should know if they're going to run the RockBot on their own machine. Serena, this video is going out for you, but I think it's going to benefit so many other people that I want to record it and put it out there for other people who are going to be using the RockBot on their own machine. Now the RockBot, let me go into a little bit more detail in history. I've gone over this, but there's been a lot of interest in the RockBot since we've started putting out a new signal called the Prop Alert signal. It really is a super signal, so I'm calling it the Prop Alert Super Signal, and it's great for prop traders because it is actually the best setup in my playbook, in my business plan. This is my ultimate trade, and over the last many months we've been putting out videos really refining the trade and setting up how we're going to send this out and the criteria behind how to take this trade, and there's so many other things that go along with this, but this is all part of the process of building a trading plan and methodology, and what I like to call trading making a business plan around your trading. So the true thing is the super signal. The prop trade alerts work great for prop traders, people who are just starting out and they want to try to make money without using their own money, or not, that learning curve that could be very expensive in the markets. This is an opportunity, and I could see how well these setups work, so we decided to do the same thing, open up these prop accounts and show how to open them up, send out specialized alerts for them, and and just kind of teach that way of trading, but being very focused in our analysis and focused on the alerts that we send out. I trade every day, and I've been trading live on the air and teaching trading since 2007. Throughout that time, I've never come across a better signal than I've developed now, and I'm so proud of that, and I'm focused a lot on that. The signal composes of really two parts. What we call a quad rotation is the first part, and the second part is one of our top playbook trades, either a divergence, a coil, or a channel, a trend line, touch. And there's variations of other things that could play that, but it's basically very simple, and I could tie it into I could put it into a box and keep ourselves in that box. And if you stay inside that box, you're going to do really well. If you step outside that box, it's like going off the path in Mirkwood Forest. A lot of people might not get that reference, but you don't want to go off the path in Mirkwood Forest. So let's start off. So I've started to offer, well, let's start off with the super signal here, because that is the key to this whole thing. And again, the super signal is just based off of some things. And during the day, my job is to send these super signals out to traders, prop traders, regular traders. You don't have to be a prop trader to take these signals. And this is a combination of things. And the combination is how I read the stochastics, and I read the price action combined with that. I do my own technical charting. I know all about charting. I know where channel lines should go. I know where retracements are. I'm proud to, I'm proud. I'm confident to say that I am an excellent charter, and being in the market so long that you kind of push away the things that do not work, and you hold on to the things that do work. So the things that do work end up on our what we call the business plan. The things that don't work, we just don't even bother with. Soon you just find yourself waiting for a couple of things, because over the years, only a couple of things have proven worthy to be successful, and anything outside that in the market is very difficult because of that. It's like walking into a casino. You're sitting in front of a computer, and you're waiting. You have an opportunity to push the button and make money, but you never know until you push that button. Excuse me. And what happens is you take chances, you revenge trade, you overtrade. This is all called overtrading. If you're not trading the perfect setup, then you're overtrading. So, without me talking too much and getting out of breath, without taking a breath. super signal is something that I'll send out. And and again, it is about a quad rotation. And I mean, this is not a video about teaching a quad rotation. I have plenty of videos out there. I just kind of referred to you to go back and just look at those videos on quad rotations that I have on the site or in the YouTube, on the YouTube channel. You'll see plenty information on it. And then the super signal and how the divergence comes in and how we have the super signal, which was right here. And then the divergence. The divergence is the second part of the super signal. And the divergence was something that came before the quad rotation really came in, and we started working them together and seeing an increase in the success rate on using both the quad rotation and the divergence than just the divergence alone or just a coil alone. Whenever you could combine it with a quad rotation, if we were getting 60 to 70% profitable trades off of just of a divergence, probably even more, it has jumped up to 85 to 90%. And I'm not kidding about that. So, I want to wait for these and I want to set them up. So how do we determine, either by watching it? In the beginning, with the RockBot, I said, you know what? These divergences are working out so good that I don't want to miss them. So I got on the platform and I started working on, putting together the code and kind of, using the NinjaTrader platform to, they had the Ninja script. I started learning that because I was using NinjaTrader. And I started developing the Ninja script that would identify the divergence on how I want to see the divergence, And then, that was supposed to be an indicator in itself. It was supposed to be for me on my chart so I wouldn't miss these. I'm a trader, that I love trading so much that I eat, sleep, and drink trading. And sometimes we don't even sleep. And what I mean by that, sometimes I used to get up in the middle of the night because these divergences work so well that I wouldn't want to miss them. That I wanted to be woken up if there was a divergence in the market, because money is money. I mean, if you have a great opportunity, if you have a 80 to 90% chance of making money, I don't care if it's $20 or $200. Would you get up for 10 minutes to do that? I figured I would, right? But it didn't really work out good. I have other people in the room. Other people, it didn't sound too good to have these alarms going off next to the bed on my laptop telling me there's a divergence at 2:30 in the morning. I find myself sleeping in the living room. Anyway, I went ahead and did it anyway. And I developed that. And it was meant to be an indicator. We made a RockBot channel. And it's supposed to tell us where these divergences are showing up. So we did that, and it does that. It does that job for us. I made it. I put out a couple versions of it. I proved it. I made it be able to trade. Now you could actually run and have it trade for yourself. But this is a tool that was meant to be an indicator, and I still stress that important part. And this is where I want to talk about this to the new traders out there who are trading with the RockBot. It is not flawless. It's the key is identifying the best spots in the market. After that, it really depends on how you set up your bot, and how the market is reacting. If the market is moving up and you get a pullback and you get a divergence, it's most likely you're going to get a follow through to the upside. Each divergence is going to give these big moves. Now, some of these moves will move up and then it will have a trailing stop and it'll come back. But if you had a bigger trailing stop or just a stop at the lows, most likely you could have got a lot more. Lots of times whenever I say there's a divergence, I always put the divergence and I put a stop under the divergence low. And that's what the script does. It puts that divergence low in and puts a stop on it. But the key is, that first pullback after the divergence. You get it following up, and then the pullback tends to come back and grab your stop and then continue back up. That's up to you. When you have the bot, you have all these parameters here. I want to show you the parameters here. So here's your RockBot, and this is like you would pull down your scripts after you download them, put them on your NinjaTrader platform. You'll have them here. and then you have a set of parameters here. And the parameters that go from taking profits 1, where do you want to take profits 1. And again, I have a lot of videos on this. If I start really breaking this all down, we'll be here for hours. But basically, these are the parameters that are going to determine at what price you want to get out based on ticks. You know, if I'm trading futures, the ES or MES, just do your calculation, 4 ticks to a point. So take profits, number 1, take profits number 1, your first profit area, how many ticks? I say, all right, we'll put down a 4 there, a point. How many take profits the lot? Lot is how many contracts you're trading. You put your lot in there. The lot is 5. You can put 10, 100, whatever, and then you just manage your numbers. You split them up between your profits and your trailing stops and everything like that. So second profit, how many ticks? I said 10 ticks. How many do you want to take off? 2. Stop loss ticks. This is a hard stop loss if you just want to put in a certain amount of ticks or points. Do that calculation. Or this was a newer version of the RockBot now, and has what we call a signal bar low, which is a pure divergence low, and that makes this thing perfect. So I tend to use this mostly, the single. And if you switch that, you could actually switch it to ticks if you want to just use a hard stop loss. I mean, you can make all these different combinations now with all these parameters. You could put in and just take 2 ticks on these divergences and put a 2-tick stop on it. You know, you could do that. You could put a candle, the candle bar stop on it. So many different, combinations you have here based on market conditions. You could put this to 12 and this to 24 and have your trailing stop at 24 and not 6 ticks, and just give this a wide range and let it trade. So you have all these parameters that are going to be difficult to manage and could mean taking big profits or little profits. And that could be an issue with people trading the bot because they're not getting in, or they're not taking their trades off fast enough based off of market conditions. It still comes down to market condition. This is a tool to identify divergences. Again, I want to go back over here. I want to enable the script. It's going to backfill after I enable the script. It's going to backfill the areas based on the parameters. If I change those parameters, it'll backfill it again. And if I had a trailing stop here, this might have captured all of this. You see this trade right here from 11 o'clock to low. The divergence took 1 profit here. Can you see that? And then it took another profit, and then it had a trailing stop. It got hit, and then it continued to move higher. Well, if I would have, let's experiment and show you what I'm talking about. If I would have gone over to here, apply, and we're going to say instead of having a 6 tick trailing stop, we're going to increase our second target, or actually we won't even do that. I mean, you could take most of your contracts off on the first target. You could take 3 off, let 1 run, or 1 to the next target, and then a trailer. So the last setting here, if you have lot 1 and lot 2, you could take them off. After lot 2, you have what's called a trailing stop. Even though the trailing stop will start anytime you want it to start by using how many ticks you want it to start and how many ticks you want it to follow by. So that's key. Normally a break-even trailing stop would be the same as your first target. So your profit would go up to 4 ticks. You would take profits. The stop would move up to 4 ticks, and it would stop following it by 4 ticks. That way you have what we call a break-even stop loss. It means you won't lose on the trade. You already took profits. Stop for the rest of the contracts. You have a break-even stop loss. You could do it that way, but then the market is just, it knows that, and algorithms run rapid. All right, so I wanted to talk about the importance of the parameters and how the settings on these are really going to determine how much money you make and how well it performs. It's going to pick the divergences, and then depending on market conditions, those divergences will work as much as they're going to work in the direction of, if there's pressure, it's going to get a little bounce. It might not get a full rotation. If there's a lot of upside pressure and you have a buy side divergence, you're probably going to go much longer. So you want to, give it more room to run. So, like I said, this, the first profit, maybe you want to have that, at a bigger number. You want to take, maybe we'll put that 12 and we'll use that as 20. And then we'll have the trailing stops start at 12. And then we'll move it up. We'll, what we'll do is we'll follow it by 12. And that gives it kind of some decent room to run. 3 points. So I usually have it very tight. It gets the 4 to 6 ticks on the first profit, moves it up to break even, because I want to identify it and then analyze it and then decide what I want to do with the trade. So it all really depends on that, and that's kind of a dangerous thing for people who just want to just push the buttons and let this thing run. You have to know the market conditions too, and how to optimize it. I talk a lot about using the right tools. Here we just activated that, and you can see this is a pretty good script here. It's long. It held up here good. It took its first profit, then it took its second profit, and then the trailing stop came. So you can see how much you got on that. Same thing here. You have a divergence long, first profit, then the trailing stop came in after that. Back here, look at this, long, first profit, second profit, ran up here, trailing stop. I mean, this is capturing most of the moves on this type of setup. Divergence long, first chart, second one. The divergence long. It looks like it was a little chop here, and this, but then it retook the divergence and then got the profit. Divergence long, and look at the big run here. And what this is going to do is going to identify these divergences for you. All right, you have to understand that when these divergences happen, I prefer people to look at them and then make sure you're not getting in right before a Fed release, or the market's about to open, or market's about to close, because the volatility is going to come in here and there's no guarantee you can't get shaken out. That happens every single day. So when I have the bot channel on and I'm using it, I say don't disregard any trades, usually after 3:15, 3:40, 3:30, or around any news release, the Fed, even the market open. I leave it running, but I say careful on your entries at these levels. I still want to know what divergence pops up, and lots of times it'll give us those divergences. It'll signal the divergence. So that's a main thing you have to deal with. Reading the market right and setting up your parameters correctly. The divergences will come, and again, you have both sides. You have the short divergence and the long divergence. The tradometer 23 buy and the tradometer 23 sell or short. I don't have the short activated on this to show you. So the other thing we have to understand here is when the market is trending down. And when the market is trending down, you have a pretty increased downtrend, and you're looking for big profits. You're looking for 20 points, but you're only getting little bounces. That's when you have to adjust your parameters. Markets are not always going to go up. So when they are trending down and you have your parameters set wrong, what's going to happen is you're going to get the divergence, you're going to get a little move, and it's going to roll over, and you get another divergence, a little move, and it's going to roll over, you're going to get a divergence. You might get that pop and get out of it, usually, but there will be times when a trend is down, you have to back off. I like the choppy market for divergences. I don't like trending markets for the bots at all, unless you're with the trend. If you could just remember that, and just remember, be with the trend. If you're with the trend, then of course the trend is your friend, and it's going to be your friend, especially with this indicator. Session closed. All right, it'll close out. The overnight trade also, you don't want to run this overnight. There's lack of volume. You might get some setups. I don't see any setups here overnight. Oh, strange. Why is that? Oh, that was like a dry spot there. So we could always adjust these now. You get a divergence, you get a pop, but the pop is a bigger divergence back here. Here's a divergence, a small divergence, but this was a better divergence. And that's another thing. The next thing you want to do with this script is you want to be able to identify a divergence. There's three types of divergences. There's a pure divergence, where there is a low, all right? There's a low in the price, and a low in the stochastics under 20. The price gets a little bounce, and then the market comes down, takes out those lows, but the stochastics hold higher than the previous low. So you have this real classic divergence. The higher the second stage divergence, the bigger the divergence, the better the setup. Here, mathematically, it might have been a low here, and then the next candle was a little bit higher, but it was a little bit lower. That one candle gave us a divergence, but it was a slop. It wasn't a great divergence. It wasn't a steep divergence. It wasn't a pure divergence. It was a mathematical divergence, and it kind of chopped around. We want to have a divergence that is visually proper, you know. And what I mean by that is I want to have the, let's see, we'll use the F2 here. I want to have this angle right here, this angle of that trend line. So just stop that. Nothing ever works for me, Johnny. Nothing. Stop that. All right. Anyway, that low and this low. And that low, and this is, you know, that's the move we're going to get. That's a pure divergence. This one was kind of a mathematical divergence. This is the divergence I want to take. Now, the next couple next versions of the RockBot, I'm working on the quad rotation sell signal right now. I'm also working on automating this the quad rotation setup, so it takes trades for you. And then we are going to, you know, I want to adjust this so you only get the pure divergences versus the mathematical divergences. Now, mathematical divergences still are divergences under the cover, under the hood. You know, there's things going on under the hood when we have a candle breakdown, but the stochastics are rotating up internally, and you can't really see it because it just, the line is just not giving us enough time. It happened between two candles, and it's just not enough of an angle there. I like these divergences typically on a 1 minute time frame to happen like 5, 10, 15 minutes apart. 10 minutes, you know, meaning 10 candles between the low and the lower low. Not 2 candles or 3 candles less than 5. Now we could adjust that. I could adjust that and make that happen. And I probably will in the near future. But just remember, it will give you mathematical divergences. And the mathematical divergences are not as good as the pure divergences where we have the angles. And that's something that you can manually check. You'll at least have a divergence set up, and you'll say, "Is that a good divergence?" It might be. It might still run. But usually, if you for whatever reason it stopped out there, and then another divergence comes in and it triggers again, typically it's a really good one. All right. When the market is trending down, you can get this very bad choppiness, which again is not a standard divergence. We like to get that 20 rotation of the 20 back over the 20 and then to come back and hold above the 20. Here we have mathematical divergences that are just choppy. That means they could give you these little chops here. And if you see that, you have to just step away and say, all right, this is a sloppy area. You're embedded. Usually if a divergence fails and I see it fails, then I'll just say, we're not going to take anything until we have a pure divergence. And if you can see back here, we have this chop, and then this is the only time really there was a low here. Market moved up a little, then we came down, made a lower low right here, and we had a higher low right here. This is the only time that we had a kind of a pure divergence. That just happened to be at the open there, it looks like. And again, now we have the overnight trade. And again, you get a little divergence there, not much going on. You got a nice little move, but you didn't get enough of a move to get the profit in before it came back down. You know, you have a couple ticks up, but maybe your profit you're looking for, you know, maybe you're looking for 3 points and it gives you a point or gives you 2 points or gives you 2.5 points. And it's overnight markets, and it's very what we call illiquid. if I adjust my parameters for the overnight markets, you know, and I could adjust this not to take trades. You know, you could also tell it not to take trades in the overnight market. But that might be something if you want to hyper scalp this, make your first target maybe 3 ticks. Second target 7 ticks. You want to be tight about this, move your stop up to 3 ticks and follow it by 3 ticks. That's a very, very tight stop. But maybe that will, you know, maybe that will give you some opportunities overnight. Don't leave it just, see now all of a sudden this one that got stopped out, the divergence worked fine. It took profits. This one took profits. All of a sudden they're taking profits because I lowered my expectations. This is a bunch of, this is awful right here. What happened? George Lane calls this, you know, a poopy market, believe it or not, when everything embeds down like this, and it doesn't happen too often, but when that happens, you look for a little bounce and then a divergence. Not usually that divergence is something that you want to pay attention to, but also that's the reason I added the super signal. When this crap happens like this, you're still waiting for the 60-10 to get overbought. Look what happened when the 60-10 finally got overbought. Right here, we actually, you know, this was at the end of the market here, but this rotation right here, when we came right back down, this came right back down, and this was underneath the 20 right here. That was our quad rotation. Didn't give us a divergence, probably could have, but that quad rotation was a good setup there. Let me see if that was a quad rotation. Now we also have the quad rotation on on this, and that's gonna be called the quad rotation trail 60. So we're gonna add that to that, and we're gonna enable that. Now I'm working on the sell signal right now. You're gonna get all these, and any updates if you are renting or owning, you can own you can own this. If you're a lifetimer, you have it for life. You get all the updates. Let's see here. You even get the code. Let's move that to this. I had this over here on 1 minute divergence. That's where that was. Let's see if that 1 minute divergence. Let's see if that triggers any quad rotations here. Sees it's calculating, and then boom. You see what I was talking about? So we have a quad rotation right here, right where we were pointing it out. And we didn't get a pure divergence there, but it was a quad rotation. And quad rotations are so important now because that's 1/2 of the super signal. The super signal is the combination of a quad rotation and a divergence, or quad rotation in a coil, or a quad rotation trend line, etc., etc., etc. So now we're trying to combine all these. We wait for a quad rotation to come out in a divergence, and that's usually a good sign. We can kind of go back here. That was a nice divergence there. There was a quad rotation right here, and a nice divergence. And you can see the much bigger move on this. This was slop, but when you get a quad rotation, that slop ends, and we get a motion in the ocean here. So you will have times when this thing gets run over. It's not, remember, this thing is identifying certain things in the market that you're going to have to confirm, especially the divergence. And when it does go into a free fall, the market has a very strong trend to it. It could give you these false signals. That's why also I love the quad rotation overlay, because when the quad rotation overlay comes in and you have the divergence, that's typically where that pivot's going to happen, and you're going to get the bigger move off of that. So that kind of helps us deal with that. Automated though, that's not going to help it if you go to bed at night and you leave this thing running, or you go, you leave it and the market starts to sell off and it starts triggering. You have your parameters wrong. It's not going to help, and you're going to come back to me and say, "I'm getting run over on this." Yeah, I don't recommend running this thing and going to dinner. It will work when the market's, perfect and it's nice and choppy, but if you get a trending market, you want to be with the trend. All right. Not every time you're going to get a quad rotation and a divergence, but sometimes I'm going to announce that there is a divergence. Like here, there was a pretty good double bottom divergence. Not that it's a big move. This is all based off the 1 minute time frame, and most of these small scalps are taking profit. But you see, they're not getting the full extension because I have my parameters now set for just 3 ticks. I would have to adjust that a little. They really, we kind of had a good one before when we were looking at this. Instead of 3, what did I have it? I had it 4. We'll just do 4, 8. And then we'll give it a little room. Well, actually, we'll give it 6, 6, and 6 here. Have to break even at 6 ticks, 1.5 points. See, now you could actually see we're capturing pretty much the whole move here. We're catching the whole move here, and that's 6 is usually good for this type of choppiness in the 1 minute time frame. The 6 tick, one thing is you look back, you zoom out, you are in the right area. Can't help the chop, and these candles and how these algorithms search out orders when the orders are placed on platforms and your broker and stuff, and they place these orders because you have stops and stuff. People could see those, things, algorithms, bots, believe me, I've seen it every day. The market come back, drop here just to capture trailing stops and orders that are hanging out underneath levels, or orders that are hanging above us, right above breakout zones. The market will pop and then come right back down, and it takes out all the stops. So if you have your order out there hanging, there's a good shot that it might be a small fish, and it might be within a bunch of stuff. But if you're looking where a lot of people are looking, and you happen to be in that crowd, there's a good shot it could come and get you. So, you will get these choppy areas, but the divergences on most part will be very near a bottom. Now, I like to combine the divergence indicator with the quad rotation script, and with the if you are getting this, you also get the tradeometer. The tradeometer comes with all the packages, and that's another. And this is really one of the versions of the quad rotation. This actually works on, and look how well this works. This works on same concept. I developed this using the ES and the MES layover. I also used the cash chart on this chart, so it combines the cash and the MES, or the ES in this case, the S&P futures, and it combines that, the 1 minute and the 5 minute time frame, and the cash the cash market also. And as you can see, it captures these things. So the combination of using both of these and the divergence, I used to say a super signal is when you get a buy signal here, and you also get a buy signal or divergence signal on the RockBot. Both of these lining up as a super signal. But we know now that I personally send out the super signals now to everyone who's a member. This is what we like. We don't like the overnight trade, which kind of just grinds and it could just be sloppy. The bigger moves during the day, this tradeometer just nails them. This was a Fed move up and down, and then Powell got off, and it was just ripped right back up. I mean, picked the low here, picked the high there, picked the low here. Really good stuff. What else do I need to? There's other things that you should understand. There is the flags, the bull and bear flags, and again, I can't stress how important it is to understand the market conditions when you use these things. You don't want to be, your parameters mean a lot. Trading, in not the right environment means a lot. The overnight trade could be very sloppy. I love to have this thing running. Get me in, because it gets me in fast. It'll get you into a position faster than you could realize it's a divergence, and that's great. And it'll put the stop in. Then you should be manually trading and say, all right, is the market trending down? Yes. I'm not going to look for my full rotation. I want to take it off faster. You get the first rotation of this the 9-3. A simple rule here: you get a divergence in a downward trending market, you take the first rotation of the 9-3 and you take your profits, or you take partial profits, you move your break even up, your trailing stop up to break even. If you're trending down, and in this case you're really trending down, when there's news out and there's things in the market that are bugging the market, and you could see some selling, there's not going to be a rotation. I wait for that first rotation, or I wait for a quad rotation. Quad rotation here was the signal that this ended. This type of selling pressure ended. So now we have a quad rotation. It tells me that this was just waiting. It was waiting for everything to get oversold enough. Remember the 60-10 here, not to blow your mind. The 60-10 is really a look at the 5-minute time frame. So when this 60-10 gets oversold, that means the 5-minute time frame is oversold. Plus the 9-3 and the 14-3 and the 44, and when they all line up, then you have multiple time frames lining up. You have a better chance of a reversal, or at least to move in the opposite direction, or to move in the direction of the signal. It's not the end of everything. It's not like here's your entry and that's the low of the market. It's going to give you a bigger move than the average move. That's been happening. Bull and bear flags, the script is available also. Only highly recommend using those in a trending market. All right, in a very trendy market, that's when you use, because a flag is a trend what we call a trend continuation pattern. A continuation pattern is like a flag, pennants, flags, things that are moving up and then they kind of pull back just a little and then continue to move up. Flags are perfect for that, and we have a perfect formula for flags. I call it the 2020 flag, 2020 bull flag, 2020 bear flag. The setup here on that, and we're going to put that on the screen here. Let's see if we could set that up for you. I'm sorry, this video is pretty long now. So we're going to go up. You're not going to have all these scripts because I'm working on all scripts all the time. So you're going to have the RockBot bear flag and bull flag. So let's click on the bull flag here, add it, and then it just has a standard, just two levels. You have your first profit and a trailing stop. It doesn't have any type of candlestick low, so you have to put your own stop loss, whatever it is. We're just going to genetically leave it as it is. All right, we're not going to worry about that. I want to apply it and then kind of talk about it. And we're going to take the other one off so we can actually see stuff. And we're not going to be overwhelmed by all the different things. So let's get on this one and let's delete these script. Let's delete that one. And now we should only have bull flag. So bull flag here is basically a move up, a pullback, where the 9-3 comes back down to the 20. The 60-10 represents the 5 is holding above 90, or 80, excuse me, holding above 80. Personally, I like it above 85. And when that criteria is hit, that typically is a bull flag. We're going to break out of that flag. And as you can see, it was a little bull flag. We held it to 20, and we broke out. And again, I have a very fast profit on this. Because flags, you typically get 2 to 3, 4 flags in a good trend, good strong trend. But if you catch it at the end, the last flag will roll over. But usually you will get a move. There just happened to be one there. Let's go back. And they don't show up as much because I have my criteria really tight. So it really has to have a very strong rally. Let's see. It doesn't usually happen overnight. This is the overnight market. And it happens in trending markets. All right, so let's see. I'm going to zoom way out here. All right, here it is. Here's a nice trend up here, pull back to the 20, and of course there we have the the fast rotation and the 60 holding good, and we got the nice move up, and it took profits. Now, personally, I think you should just take it all off on the profits. I just have it at a trailing stop in case it continues. In this case, again, this is the overnight, 2 o'clock in the morning. That's sloppy, not much. I wouldn't, again, look for these and let these things run overnight. But on these great little flags like this, a very strong market, came down, this holds up, this rotation down, holding the 20, and then off to the races, trailing stop up with a bull flag here, and then actually took it off at the close, but it was working out. So a lot of these, these work out pretty good. I'm very happy with it. There will be some cases where they will not get that full rotation, might be at the top of a range. But, it's just another indicator that lets you know what's going on in the markets. So I hope this video kind of helped you understand some of the concepts behind the RockBot and why I developed it and why I use it. I think it's a great indication of divergences. The quad rotation is perfect for what we do, because the quad rotation and the divergence is one of our super signals. It will give you more, I'm going to be still calling out the super signals, and I'm going to have my own little personal touch on the super signals, because I've been in the market longer and understand the conditions, and I'm able to analyze conditions and see underlying trend lines, which the bot is not doing. So if I see a trend line or a divergence with a trend line and watching this market, I'll really know these levels. If I see a coil, I'll point that out. We see a quad rotation, I'll point it out. Maybe the bot doesn't, because the bot on a quad rotation, you might see sometimes, it's not an important fact, you might actually see the see the quad on here. There's my quad here. Did I turn it off here for a second? Yeah, I think I did. Yeah, I did. Let's take the spot. Take the RockBot flag off. All right. The quad rotation requires 2 candles of the time frame to be moving up. This kind of prevents a situation that you're going to get into where you're going to have a series of quad rotations line up because everything's lined up. Remember, if you have this crappy action and you're just kind of starting to, the market's starting to trend down and you're getting these false signals, and this is because it's chop, you got to wait for the quad rotation to get you out of it. That's usually what happens, downward move. Eventually we got the quad rotation, we started moving back up. This is an example where I would say this was a good quad rotation. Divergence. Quad rotation, though, requires all 3 of these to be down, but I could tell you right now from my experience that a quad rotation mostly comes along when the 60 is oversold and and this one doesn't have the 44 and the 14, but if the 9-3 is given a divergence and the 60 is oversold, that is a super signal. That is the super signal right there. That's the big one. And it might not show up as a divergence or a quad rotation because the quad rotation requires all these. So lots of times I want to make that call. I want to make the call saying this is a quad rotation divergence, meaning that we have most of it, and that's what time was this? This was 15:20, 3:20. There was a couple other ones here. Here was kind of a good one here, right back here. This one we did have a quad rotation and a divergence. And that one actually triggered because it wasn't too far gone. So I make sure that this isn't too extended before we get that quad rotation. If it's too extended, I'm not going to, it's not going to trigger. So we're going to have some of that nice action here, and it gives you that nice upside. In this case, you had a quad rotation here. Slot. What time is this? 10:40. This was that weird candle here. It came down, triggered. We got a little popped and pulled right back down here. And this was a divergence. It wasn't a divergence quad rotate. Well, it wasn't. It was called a divergence on the bot, which is a mathematical divergence. It was good. Remember we talked about having that pure divergence where we have that higher low. Well, the mathematical divergence is in the rotation. You know, that's something that you have to consider. But you know, I think it all comes down to the big picture. You know, we get so worried about when we look at everything, and we get all tied up in these areas. If you just look at the big picture, you'll see that the areas where these things come in are usually really good areas, even though they might be a little choppy. Eventually, they have these big moves. You know, big moves, big moves, big moves, big moves, big moves. And they catch it, and they catch the bottoms really good. Big moves. This was a target from something here. It was a big move too. All right. Well, that's it. I wanted to just touch base on that. For those interested in the RockBot now, it is offered on the monthly plan. We never really did that before because it requires a lot of work to kind of, you know, get the license in there and check it each month because there's not an automated system set up for that. But I'm working on a bookkeeping thing that will automate it for me. So we open it up for the monthly and the 3-month memberships and the yearly memberships. So the different. So a lot of people, we only used to give it out to lifetime members, and they used to get it for free. So that was. And if you are a lifetime member, you do get it for free. If you want to, you know, if you're a lifetime member, you always get it. You own that for life. All the upgrades and stuff. So. But now you can test it out, and we're always, you know, redeveloping it, tightening it up, fixing some of the, or taking some of the suggestions and adding the things to it. We got the short quad rotation coming up. I got a couple other things that we're going to do. We're going to do a combination. We're going to do that super signals thing. So there's a lot of good development coming on that, and I think I'm going to fix the. So we have that more of that pure divergence, what we call lane divergence. We have the low and the higher low versus the choppy mathematical low, where the price is low, stochastics are high, but everything's kind of embedded under the 20 mark. That's could be dangerous, and you need to recognize that when it's happening, so you don't get run over. Again, I do not recommend running these by itself. I recommend having it run on your machine and getting you in positions. And then you manually put your trailing stops in, follow the market, you know, adjust your entries, adjust your profits based off of market conditions. The market's strong, let it go. If the market's very trendy low and you got like 2 or 3 ticks, and you're underneath the 20-period moving average, and the 9-3 stochastic is getting overbought, take profits. You do that, you're going to be so successful. You will be so successful. The key is taking profits on that first rotation in the downtrend. Well, I'll leave off on that. That is the key to everything. When you have a setup like this, if I could find this one more time. Which one was I using here? There we go. If the you get a setup here, like here, even though this took profits. If you didn't and you had a nice divergence and the market's kind of selling off, it's been selling off, and you're getting these little bounces. How do you get out? You get a divergence. You see this 9-3 right here? How we got over 80 right about here, right, it's up around that 80. Typically we rotate and roll over. We got oversold again, another divergence, It popped quickly. Look how fast it's rotated up above 80. Right up here. Take your profits. Take what it gives you. I don't care if it gives you $5 or $50. You take it, because the odds are you're going to rotate back down. And then you might get another one. And you might not, you get a fast rotation. You get up at 80, and you have a couple ticks or something. Take it off. If you do that each and every time, you're probably going to make money on most of those trades, be it 2 ticks or 20 ticks. Take profits, especially on a rotation like that. The 9-3 rotation is your safety net. That's your signal to get out of Dodge before things go bad. If it's a good positive market and you have the stochastic on the 60-10 here rotating in your favor, let the trade go a little. The 60-10 is very important for the bigger trend. All right, I think that's going to be it. If you do get the RockBot and you sign up, you send me an email. And then you're going to have to send me your RockBot machine code. And I have a lot of how to download the scripts and stuff. It's all there, so don't worry about anything. You'll see it. Oh, I just did the bull bear flag again. Let me get rid of some of these things. But you have your scripts here. You bring them down. Your parameters. Make sure your parameters are set. The optimization. Also, Serena, you asked me a question. Can you use the RockBot on the evaluation accounts or just the prop alert signals? You can use the RockBot for evaluation accounts if you use your own license. The license they supply you is a single broker license. So I don't believe, or that's a single. It's one of their. It's their basic license, which I don't believe allows third-party scripts to run. That's I believe. But I have a license, a professional license on that, so I can use it. If you have your own license from NinjaTrader, yes, you can use it. If you're using the license they give you, I don't believe you could use it. But I'm not 100%. I'm 90% sure that is because I have the license. I've been trying to use their license just to test it, but my license keeps defaulting in, and that's it. But stick with the super signals. The super signals are hand-picked signals, so that's important also. If you get it's great having the bot and everything working for you to get you into these trades. And during and again, be careful overnight. Have it running. You can put it on sim mode, have it running like I used to do, and make it do an audio sound. Get your attention if you get a divergence. Walk over to the computer, see how the divergence is. It could be a good one. It could be a flat one. It could be one in the middle of the night. It might be a quad rotation with the divergence. You might want to take a little shot at it. That's how I use it, as an indicator. All right. Hope this helped everyone. If you have any questions or anything, email me at ironaction@yahoo.com. Have a good evening. Catch you tomorrow.